Hello and welcome to another Major Market Movements video blog update for November 27th, 2014. I'm Quad G, and in this video we're covering hammer candles and I'm going to show you just how important hammer candles are and why you should be watching for them and trading off of them. So first off, we're going to take a look at the gold market on the daily chart. I want to point out this very important hammer candle that took place back here in October of 2008. You can see previously we had a downtrend and that ended right here at this daily hammer candle. And the hammer candle is comprised of a long handle and a close of the handle, whether it's positive or negative for the day. In this case, it's positive. The close needs to be in the top third of the candlestick range. So if you were to take the top of the candlestick there, which is the high at 747 and the low at 682, and you would get a difference, divide that by 3, and then subtract a third from the top, and that's gives you a threshold for where your candle needs to close to register a hammer candle. So this certainly qualifies. The other thing you want to look for in a successful hammer candle is you want it to be of good depth, meaning for the gold market in particular, I generally look for 1% depth or larger. So this particular candle is well above that with a from the high of 747 to the low of 682. That's several percentage points in depth there, so that also qualifies for a good hammer candle. So this hammer candle also the end of the handle sets a tradable low or a key support. In this case at 682. So if we back out from here, you're going to see that hammer candle ended up being a major low here for the gold market, and from that point we saw some significant multi-week fall through to the upside. Hammer candles also come in another variety, and that's inverted types. And so if we go to have an example here in silver where we have an inverted hammer, or what I call a I hammer, and it also had a great placement at the top of a multi-day uptrend. The long handle of that candle did produce a tradable top at $15.09. The daily close there of that candle was in the bottom third of the candlestick range, so that also qualifies. And then the depth, the high was at 1509, the low was at 2423. And in silver, I generally look for about a 1.5% to 2% depth of the candle for a successful hammer candle, and we certainly got that as well. So back out here, you can see how that inverted hammer candle did set a significant top there at $15.09, and we saw some significant fall through to the downside, which just so happened to end right here at another well-placed bullish hammer candle right here, and we did see a bounce up from that point. Also, this run up, the previous run up into the bearish inverted hammer candle, also started with a well-placed hammer candle that had good depth also. So hammer candles can be responsible for significant tops and lows, and there were along with other sources of technical analysis, they can often signal good points for tradable entries. I want to go into some finer details of I want to show you here on this forex chart for USD CHF, where a 2-hour chart instead of a daily chart. And generally, anything from 1 hour and higher is a good time scale to take advantage of hammer candles or any kind of reversal candle. And in this case, with the 2 hour, we do see some fall through to the upside. With this hammer candle right here, which was bullish, we did see some nice fall through to the upside. This was in good placement since the previous trend was down into it. But I also want to point out here that we do have another inverted hammer candle right here, but the reason that this one would be disregarded is simply because it's too small. In general, I like to see, for the Forex markets, I like to see the hammer candles or any kind of reversal candle be 0.2 to 0.3% in depth before considering it for a possible trade. And this one here with only 13 ticks, that doesn't qualify. So that would be disregarded, not even considered with shorting or ending any long position, that's for sure. So also I want to point out that since this is a 2 hour chart, the expected fall through off of a 2 hour time scale is generally not as long or as going to produce the kind of results that a hammer candle on a daily chart would. For example, if we go back here on this daily inverted hammer for silver, we saw multi-day, multi-week fall through to the downside. But with this 2 hour hammer candle in the Swissy versus the dollar, we only see follow through that only lasts, I would only last up into about this point. So you're looking at maybe starting here on the 15th, we saw follow through into the 22nd. So generally about, you're looking at about a week or so. And that's generally about as far as a 2 hour handle, two hour candle will end up taking you. Let's go on to the Aussie dollar. I want to point out here another place where this is not good placement. It's got good depth from top to bottom, but not good placement because it's in the middle of a congestion period. So generally you want to see hammer candles take place at the end of good solid trends. And that's going to be the place where you're going to find the best results. Here's another example in the gold chart where the trend was down into these two hammer candles. That was good placement. The depth was also good. We saw some follow through to the upside. But this hammer candle right here is a good example of placement that's not great for taking advantage of any, a tradable bottom, simply because the placement is at the end of what is already an ongoing uptrend over the past few days. So it's maybe not a good place to enter in long at this point, but it does set a key low. So that low is at 1644. So if you had gotten in long, let's say, at these two hammer candles and you were writing position to the upside, that would have made sense. And seeing this hammer candle may not have been a good place to enter in long, but it certainly would have been a good place to set stops just below that hammer candle. And you can see how the market came down. It broke that hammer candle low there, and it would have been a fine place to be stopped out because we see some follow through to the downside once that hammer candle was broken. So just some hammer candle dynamics there to pay attention to with regard to placement and hammer candles being a good place to set key support or key resistance for your stop loss levels. Here's another example where here's a hammer candle that did see some follow through to the upside. Here's an inverted hammer candle that saw the follow through to the downside. But right about here, we see what could have been a fine hammer candle for a significant low. The previous 2 weeks had seen downside, and then it could have been stopped right here at this weekly hammer candle, bullish hammer candle. Except the following week, we saw no fall through to the upside. The week came down, it broke below the lower point of the bullish hammer candle there at 1261. And once that was broken, we saw some fall through to the downside as well. So best to respect those hammer candles once they're broken. They can often lead to significant reversal in the expected trend. All right, let's move on to what's currently going on in the gold market. You can see here in the last couple of weeks, we did see a bullish hammer candle, which set a significant low at 1131, and we've seen some nice fall through to the upside, some initial follow through. So can this bullish hammer candle be, with it being a weekly candle, I would expect several weeks, maybe even a few months of fall through to the upside off of this hammer candle. So as long as we're above 1131 at this point in time, I would expect some further uptrend. If this level is broken, then we've got enough weight above it that it could be a significant break of that point and allow for a larger sell-off if that point is broken. Let's go back here. Here's a nice hammer candle as well at the end of a downtrend, plenty of depth, and we see some fall through, nice fall through to the upside as well. So here's an inverted hammer candle on the weekly and fall through to the downside. You can see, if you go back in time and take a look for yourself, you can see how these hammer candles can result in some very significant trends coming out of them. Here's another example. We have a downtrend, comes into a weekly hammer candle, which set a significant low there at 1526. And you can see for several weeks, even a few months, we see the market remain above that hammer candle and see some fall through to the upside. So at major market movements, in my subscription service, I'm constantly watching for these candles, differentiating between those candles that are good and bad, which ones are tradable, setting up trades for potential moves to the upside and downside. So if you're interested in this kind of trading, interested in technical analysis, applying it to your trading, consider signing up for a free 30-day trial. It's not for everybody, but if you find that this suits you, then consider signing up for the subscription, and hopefully it will suit your needs. Okay, that's it for now. You all have a great Thanksgiving weekend, and we'll be talking to you later. Adios.